You're watching the Smart Market Insights right here on Kalkine TV. I'm Rose Jacobs, and we're about to shine some light on why nickel and aluminium prices are so high, and also how nickel prices have surpassed US $100,000 per tonne. There's plenty going on in the market, and the main force that might have shaped everything from equities and bonds to commodities and even the crypto market over the past few weeks may have been the ongoing crisis in Ukraine. The US federal rate hike worries seem to have taken a back seat for now. First, we can't forget the prices of many commodities, including aluminium, hovered in a higher trajectory even before Russia invaded Ukraine. Prior to the war, the receding of the pandemic and higher than expected job growth in the US in the first month of this year revived hopes of an economic recovery, which meant the demand for industrial metals could go higher globally and therefore perhaps the rally in prices. Separately, supply chain constraints exited, and inventories were also under pressure. But now the problem seems to have reached a different level completely. First, sanctions on Russia may not mean economic isolation of Russia alone, but a major blow to the global supply chain. China, a major metals supplier, seemed to be tilted towards Russia in the ongoing conflict, though there is no official statement as such. Second, ousting Russian banks from the SWIFT payment system by the US and Europe may have an impact on the entire global supply chain. Russia doesn't get inward cash alone, but it also pays for its exports, which might be impacted by the SWIFT decision. And now the US has posted yet another month of better than expected job growth in February. The local economies of most countries seem to be shrugging off the pandemic blues, but the global economy is in a strange situation, and that's what may have worried traders, which could be why commodities are gaining on possible anticipation that demands in the local economy may not be met due to global supply chain issues. Besides this, it may also be true that traders are tweaking their bets, and some funds parked in equities, also under pressure due to rate hike fears, may be going towards the commodities market. Higher demand for commodities on exchanges would lead to higher prices. The case of nickel is the same as that of aluminium. Russia's Rusal is a big global supplier of aluminium, and Russia is said to account for almost 10% of nickel the world consumes. Notably, nickel finds use in one of the top emerging industries, which is electric vehicles. Elon Musk is the world's richest man for a reason. Batteries for EVs need nickel. And now that there is discernibly a short supply in the market, which might even worsen if geopolitical troubles soar from here on, there is a possibility that prices in the future will stay along the same higher trajectory. Of late, nickel has soared to record heights, while aluminium, which had surged steeply in the past, has pared some gains. Prices, however, may not come under heavy pressure anytime soon. The prices of nickel surged by a whopping 65% on the 8th of March, though prices shot up nearly 111% to US $101,365 per tonne during earlier trading sessions to record a new all-time high level. This marks one of the most extreme moves recorded in the history of metals. Consequently, the London Metal Exchange went to a halt due to rising nickel prices, as prices doubled to more than US $100,000 a tonne. After the prices went into chaotic overdrive, the LME cancellation transactions and suspended trading, which is being regarded as one of the greatest crises to hit in decades. The latest Western sanctions on Russia sparked concerns over the metal supply. The supplies of key metals, including nickel, are expected to remain disrupted in the international market. The prices of the key battery metal were already on fire before the Russia-Ukraine tussle at the back of robust demand and dwindling inventories, which are currently at their lowest level since 2019. Besides, the current surge in the prices is also supported by the idea of Western allies to ban Russian oil imports that have spooked the metals market. As per Australia's December Resources and Energy Quarterly Report, Australia accounts for more than 26% of the world's total nickel resources. At the same time, the country's nickel miners produce more than 200,000 tonnes of nickel per year. ASX mining stocks are witnessing a steep climb amid skyrocketing nickel prices. The bottom line is this: if there is one thing that could possibly calm the commodities market, it may be the end of the ongoing conflict, which might be followed by the West considering the easing of sanctions on Russia. But if the situation continues, it may further push commodity prices up owing to supply-side anxieties. And that's all for now. We'll be back again with the exclusive Smart Market Insights show. Till then, keep watching Kalkine TV for the latest market updates and related insights. I'm Rose, signing off.